Hello and welcome to my channel. Today we're going to be talking about the basics of trading the Ichimoku Kinku Hayo. If you're new to the channel, don't forget to subscribe so that you can get more videos as they drop. So the Ichimoku Kinku Hayo, when translated, means one glance equilibrium chart. Pretty much like just by looking at the chart, you're seeing every level of support, resistance, direction of the market, the trend, etc. So using the Ichimoku is one of those technical indicators that traders have found to help them trade, look for entry opportunities, be able to trend trade, and all of those. So looking at this indicator, it looks complicated, but it's actually very, very easy. One of the easiest indicators to use as far as technical analysis is concerned. So let's talk about the component of the Ichimoku Kinku Hayo. The first component we're going to talk about is the Tenkan-sen. The Tenkan-sen is seen as red, although on TradingView you might see it as another color. When we go to the chart, we're going to take a look at how you can find it on TradingView and even on MetaTrader 5, because you can use this indicator to trade currencies and even to trade binary. So the Tenkan-sen is often seen as a color red and is used as a signal line. It's a 9-day moving average and it's technically used to spot minor support and resistance levels. So say you are trying to trade like a breakout retest strategy, you could use the Tenkan-sen as one of the tools to trade a breakout retest strategy. So at this point, as you can see on the screen, at this point the market did break out of the Tenkan-sen and then it did a retest of it. So that point where price broke out of and did a retest is a point where traders will look to buy, because technically this is seen, which was initially resistance, is now seen as support. So the market broke out of the resistance level, did a retest, and then traders look for buys at this point and take the market. The next component is known as the Kijun-sen. The Kijun-sen is this blue line right here. It follows the Tenkan-sen. Some traders uses only this moving averages to trade moving average cross. So they uncheck all of these other components and only use the Tenkan-sen and the Kijun-sen, because both of them follows each other and can be used to trade cross. So at the point where the red line, which is usually faster, crosses the blue, traders look for buy opportunities. So at the points of cross, they could wait for price to do a retest. So it could be either retesting the red line or retesting the blue line. So after the retest, traders look for buys and then take their market. So the Tenkan-sen and the Kijun tend to follow each other and can be used to trade the moving average cross strategy. The next component is the Chikou Span. The Chikou Span is seen as a lagging indicator, and it is seen as the green line. The Chikou Span is a 26-day moving average that can be used to trade crosses also. One of the beautiful things about the Chikou Span is that it is structured, or kind of like if you switch the candles, for example, all of these candlestick patterns right here, if you switch it to line, it looks exactly like the Chikou Span. But it gives a more graphical representation of the candlesticks. All right, so in trading moving average crosses, you could use all of these three indicators, but mostly the Tenkan and the Kijus is okay for you to just use to trade your moving average cross. Next, we're going to talk about the Senkou Span A and the Senkou Span B. The Senkou Span A and B also do serve as support and resistance level. So the Senkou Span A can be seen as support and the Senkou Span B can also be seen as support. So support 1 and support 2. So how does it work? When price is above this, when price is above the Senkou Span A and B, this first line right here, that Senkou Span A, serves as the first level of support, while the second line right here, which is Senkou Span B, serves as the second level of support. So for every time that the market bounces off of the Senkou Span A and the Senkou Span B, it means that the uptrend is continuous and it is strong. Another thing about the Senkou Span A and B is that they are responsible for the change in the Kumo cloud. So the Kumo could be blue, could be green, it could be red, So when the Senkou span A and B crosses each other, the Kumo cloud changes. So if it changes to green, it means the market is bullish. If it changes to red, it means the market is bearish. All right, so at the cross of A and B, the cloud changes. So the simple strategy in terms of the Ichimoku is to only look for buys when price is above the cloud. So this whole thing right here is the cloud. And the guys responsible for the color theme of the cloud is the Senkou span A and B. So when they cross, the cloud changes. So a bullish cloud signals a bullish market. So when all of the prices, all of the moving averages, the Chikou Span, the Tenkan-sen, the Kijun, when they roll above the cloud, you look for buys because that's a bullish market. And when they roll below the cloud, as you can see here, you look for sells because that's a bearish market. One strategy aside the moving average cross is for you to see that the Tenkan-sen and the Kijun has crossed the cloud. So at the point where the Tenkan-sen and the Kijun crosses the cloud, you might wait to see a retest, because what it simply means is that it has broken the Senkou span A, support 1, and broken support 2. So see a retest on support 1 or support 2. At the point of that retest, you can use your price action strategy, your candlestick patterns, look for your entry confirmation, your entry trigger, and then take your trade. So this strategy was taught extensively on in lesson 13 of the Trade to Profit Masterclass. Now this class is an online course. That means upon purchase of the course, you can watch it and learn to trade at your pace. Now the class is designed for both those who are just starting to trade and those who are still struggling in the market. When I say struggling, I mean you've been trading but you've not been withdrawing, you've not been profiting. If you make profit today, tomorrow you lose all the profit plus your capital. So these traders tend to struggle to make money in the market. So this class is designed to help you not only to trade but also to trade profitably. So in the description section of the video, click on it and check the link right there on how you can gain access to purchasing this course. So let's go to a chart and take a look at how you can trade this on TradingView and then on MetaTrader 5, because we're going to be using this to trade currencies and binary. Alright, so this is the TradingView platform, and this is the United States dollar, South African rand, the USD ZAR. So how can you find the Ichimoku indicator? On this part right here that says FX, you click on it, and when it comes out, you type Ichimoku. So you just type Ichimoku, ICHI, and then it comes out like that. Or you could just go all out and type everything depending on your network. So when you find it, you click on it. When you do, it comes on the chart. The beautiful thing about the Ichimoku is that it is plotted on the chart as against other indicators that I usually see below the chart. This is plotted across or on the chart, so you can easily use this without having to do all that analysis. You can just use this as a one glance equilibrium chart. So these are the components of the Ichimoku. You don't need to change the settings. All you might just need to do is improve or beef up the signal, the colors, and the texture, etc. So the conversion line, the baseline, the lagging span. The conversion line is known as the Tenkan-sen. The baseline is known as the Kijun-sen. The lagging span is called the Chikou. And the lead 1 and lead 2 are the Senkou span A and Senkou span B. And of course, the background, color 0, color 1, these are the Kumo clouds, all right? So green is for buy, red is for sell. So when the cloud ahead is bullish, it turns green. When it's bearish, it turns red. So what you could just do, you're not changing the input, you leave it the way it is. The only thing you're changing is the texture, the thickness of it, and then the color. Even the color is also best left like that. All right, you can leave the color like that. So just beef up the signal, and there you have it. So beef up the signal, and that's it. Now some traders uncheck all of the components, but I don't. I leave everything because I don't have any plans of unchecking it. So just looking at this, you could easily tell that this is an uptrending market, because all of the prices are above the cloud. This is the cloud right here. And if you look at the theme, the color of the cloud, you can see that this is still a bullish market. So this will remain a bullish market until all of these indicators, everything crosses the cloud. So this is clearly an uptrending market, and all of these points we're seeing here, this is Senkou Span A and Senkou Span B. So seeing that this is an uptrend, this part right here is the first level of support, and this part right here is second level of support. So this is support 1 and this is support 2. So until the price breaks both support levels before we can now begin to say the downtrend is ready. Now another thing you need to know about the Ichimoku is that it's best used on a higher time frame, although some traders uses it on the 15 minutes time frame. If you're going to use it on a 15 minutes time frame, it's okay if you are a scalper. So if you just want to scalp 5-10 pips, you can use the Ichimoku on the 15 minutes time frame. It's actually one of the top indicators to trade with, to scalp with on the 15 minutes time frame. Why is that? Because it will help you easily spot the trend, where the market is, the point where the market is, and you will be able to, buy a buying market, sell a selling market, etc. So on the 15 minutes time frame, you can see how the cloud already is bearish. So this is already telling us that this is a bearish market. Let's take a look at how we can, the best possible place to enter this market. So remember what we said about these two indicators. First, the Tenkan-sen and the Kijun-sen. This one is faster compared to this. Okay, TradingView made their blue. Let's change it to red. Let's change it to red. Let's change it to red, so it's easily seen. And let's change the baseline. Let's make it blue. All right. So that way there is no confusion. Oops, sorry, I'll check something. So the minute price breaks out of the Tenkan-sen, that's a red line, and even goes past the blue line, then you could easily just take your sell, because then it's clear that this is a sell market on the 15 minutes time frame for a scalp. So this is a scalping strategy that I'm about to teach you right now. So let's take a look at the points where we saw that break in price. Now, if you zoom out on this part, you can see there was a little bit of consolidation around this point. And then what happens, you can see how the market broke out, like cleanly out of the Tenkan-sen and the Kijun-sen. So at this point right here, you know that your sell is confirmed. You could wait to see a retest. The retest happened right here. You can see how the market did a retest, pushed all the way back up, and then the sell happened. So you could wait to see that retest, or you could just take your scalp trade and go. Another safer way that you could also do this is to make sure that the market is completely out of the clouds. So if you're looking for sells, be sure that you're seeing that the market is below the cloud. So this is a sell opportunity, and the market is above the cloud. This is a buy opportunity. So at the point where price broke out of this initially was support 1, this was support 2. So the minute the market broke out of support 2, then you're taking your sells. So you could see a railroad track, you could see any of those candlestick patterns that you have learned how to trade, and then take your market, sell your market, and go about your day. So this is for those who likes to scalp. But for people who would rather stay and take long-term positions, it's best used on the 4 hours time frame. So on the 4 hours time frame, you only exit your position when the price has gone below the cloud. So this is still bullish. It's only bearish when all of these things are below the cloud, right? So the Ichimoku helps you spot the trend direction of the market, and also how you can place your entry. So at the break, wait for the retest, and then take your market. All right. So this is for currencies. Now let's go to MetaTrader 5 and see how we can use the Ichimoku to trade binary. So this is the MetaTrader 5, and here we have volatility index 75 on the 4 hours time frame. So how can you place your indicator on your MT5? So here that says insert, you click on it, and it says indicators. So all of the indicators will be listed here. All right, this, blah 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 blah. So on trend indicator, you would have all of these indicators that will help you spot the trend perfectly. And one of it is the Ichimoku Kinko Higher. So you click on the Ichimoku Kinko Higher, it appears here. So the same thing also on the MetaTrader, on the TradingView, is what you also have here. So all you just need to do is set it, don't change it, just leave it the way it is and just set the colors like that. So this is my bullish cloud and this is my bearish cloud. Bullish, bearish. Okay, so all of the components are still the same. This is your lagging span, which is the Chikou. This is your Tenkan-sen, and this is your Kijun-sen. Now let's take a look at what happens based on this indicator. Right now, the market is bullish. This is an uptrending market. It's just clear to see. This is an uptrending market. So you're not looking for sells right now because there is nothing indicating the sell. All we're seeing that the market has been trending up. Now take a look at the point where price or the uptrend started, so to speak, to see how the market broke out of all of these. This used to be resistance. This was resistance 1. This was resistance 2. Now notice how price broke both resistance cleanly and did a retest. So the market could retest resistance 1 or it could retest resistance 2. So it could retest the first and second. So just have these two zones as your zones to watch as to where price would like to retest. So this is a better way to do it. Instead of running after the trend, see that there is a break 1, see that there is a retest 2. Where's price retesting? Price is retesting either the Senkou Span A or the Senkou Span B, right? For a market that has been on a downtrend, the minute the trend changes towards the upside and that break happens, see that it is either testing the first level of resistance or the second level of resistance. So at the end of the test, you take your buy. So the market did the buy, clean, easy profit. So you're already out at this point. This is the second retest, clean, easy profit, and then the market continues the trend. Another way you could trade it is to use the Tenkan-sen, that's the red line. So see that price is out or price breaks the red line. So at the point where price breaks the red line, you could take your buy. So instead of having to wait for all of this, like miss out on all of this profit, you could use the Tenkan-sen as technically a baseline, like seeing support and resistance level. So the minute price breaks the Tenkan-sen, wait to see a retest of it. So see how the market broke it at this point, and it did a retest. This candle was a retest candle. So after the retest, what happened? You take your buy and you enjoy the profit. So instead of waiting until it breaks the cloud, you could use the Tenkan-sen as a way to trade it. Another strategy is to see that the Tenkan-sen crosses the Kijun-sen. So see that the red line crosses the blue line. So when the red line crosses the blue line, wait for the retest. That was what happened here. Price, after the cross, this was the candle that gave rise to the cross. There was a retest of that blue line, and then the market continued to go in the upwards direction. Same thing also for the sell direction. See that price is below the cloud 1. See that price breaks the red line to do a retest, and then you sell it. So these are the different ways that you could trade the Ichimoku Kinko Higher on binary and even on TradingView. So you could use it to trade currencies and you can use it to trade binaries. I hope this made sense. I hope you've gained value. Remember, click on the description section. If you're new to Forex, don't forget to subscribe and send us an email if you have any question to ask to your trading journey. Have a good day. Bye-bye.